You were listening to chartingwealth.com for Tuesday, the 16th of January, 2018. Why the 16th? Because the market is closed on Monday for the Martin Luther King Jr. holiday. But it'll be open for business come Tuesday morning, and that's what we are preparing for. Before we jump into the markets, we told you on the broadcast yesterday how we were working hard on putting together 3 training packages, specialized training packages for you. The first, an advanced training, the second, an intensive training, and the third, a personalized training with all sorts of things we're going to be doing for you throughout the month, throughout the quarters, throughout the year. We're also going to be providing to all of our students the Trader Journals. And I want to talk specifically about the Trader Journal before we jump into the actual charts for today. Please make sure that you, in the meantime, before we offer the courses and have them out there, and that'll be coming out over the course of the next week or so, but you can upload everything that we have to offer right now if you are a subscriber to the daily market review that includes this weekly comprehensive review and forecast. And that email, by just going to chartingwealth.com and signing up every day, we have a link in there for your daily market worksheet, your weekly market worksheet, and your trade worksheet. Please, my friends, we do this for free, okay? The daily market reviews, the comprehensive review and forecast, the paid training, those of you who are the hardcore that really want to delve into this super deep, please, by all means do. But I will tell you that if you will work hard, particularly those of you who money is tight, just work hard with us every single day. Print out those daily market worksheets, those weekly market worksheets. That's what the Trader Journal has in it. And use them, particularly the trade worksheets. You need to be doing practice trades every time you can find one. And the beautiful thing about that trade worksheet is it has you put down the important things, the entry point, the reason, what your thinking was, what happened throughout the trade, what you were thinking when you thought you might get out, why you didn't get out, why that worked or didn't work. And then at the end, the lessons you learned from that trade. I'm telling you, that stuff becomes your trader's diary, and it becomes invaluable because each of the charts we review and all the stocks that we'll be having in the training and the options trading and all the stuff that we'll be practicing in the future, all of that comes down to getting personal with the stock or the ETF, learning it day in and day out, and getting to where you can feel it. You know what it's going to do. Whether it's the SPY, whether it's the Qs, the NASDAQ 100, whether it's the bonds, TLT, whether it's gold or other precious metals, whether it's some of the stocks within the S&P 500, whatever it might be. The lessons that we teach you here apply across the board. And the practicing that you do, the quality of your practice ends up being the quality of your play. That's what life comes down to. And if you don't practice it, you can't do it. Those of you who are involved in the martial arts like I have been for years, you know that your body cannot go where your brain has never been. What that means is you've got to practice as close to the real thing as you can possibly do. And that's what we do here every day. That's why it's so critically important. Now, enough on lessons and all that other stuff. Let's jump into what these markets are doing. And thank you for your patience, my friends. Again, we bring this to you free every day. We want you to get this. What do we see? The S&P 500s ended the week on Friday up 0.66%. We look at the weekly chart. We see it hyping up big time, a gigantic candle. Actually, looks like it's about twice the size, maybe more, of the prior week as the candle ends on Friday, the 12th of January, 2018. We see that the price percent oscillators actually kinked up a little higher, pulling away from that red signal line. Derivative oscillator also gaining energy. S&P 500, go, 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 go. When did it cross over going up on our charts? All the way back on the 29th of September. And but for 2 weeks, it has been climbing like a rocket. Those of you who jumped in somewhere around the 250 mark have seen this thing skyrocket to a high of 278.11. Is that not the most incredible virtual trade you ever thought about? Incredible, and it comes from being able to read the charts and watching these weekly vertical crossovers work for you. Let's keep pulling through this and see what we see and sort of what we might expect to happen over the course of the next week. We see that the 2-day chart has now 4 strong days, 4 strong 2-day candles, which represents 8 days of up movement, strong, after we had the 2-day crossover back on the 4th of January. So again, that's pushing forward. Actually, we're just a hair above the Bollinger Band. And again, interesting to watch. Derivative oscillator gaining energy, price percent oscillator spiked up even higher. As we look at the 4-hour chart, what do we see? About the same thing, derivative oscillator gaining energy, and the price percent oscillator moving up. Didn't spike up higher, it didn't going up at quite the same angle, but again, still strong. Strong in the morning and in the afternoon on Friday. Price movement well above the 2-day trend line and the weekly trend line. How long will this go? What will it do over the course of the next week? Well, everything is currently primed in our trend following to keep moving up, my friends. Now, there can always be terrorist attack, bad things that happen, companies that fail, stuff that can drag the index down, political problems, you name it. Hopefully that won't happen, but again, with the kind of crazy upswing that we have had since September, there's plenty of time, hopefully we'll have, unless it is a complete catastrophic meltdown, if something did go wrong, to pull out and still save all of that sweet virtual profit in this crazy, crazy uptick in the market. That is where we end the week on the S&P 500. And as we get ready for the market to open back up on Tuesday, the 16th, after the Martin Luther King Jr. holiday, as we expect it to continue going, we'll just keep watching it and cheering. What do we say on the Qs? Of course, that's the NASDAQ 100 up 0.73% on Friday. And again, another huge up candle. Now remember, the Qs didn't start moving up on that vertical crossover till about a week after a month after. That started in October, late October for the Qs when the crossover occurred. But again, that was back around, yes, the week ending the 27th. But what we have seen, of course, is again, we had 3 weeks of pullbacks, but again, strong up movement. And in fact, last week, this past week has been the strongest. And remember, what did we have at the end of the prior week? We had that weekly vertical crossover going up. How sweet was that for you to have jumped back in, if you had gotten out, back into a sweet, beautiful up movement that just blew it through the roof? Gorgeous. Again, the power of the weekly vertical crossover. It tried to fake us out the prior week. We had no jumping in point then, so there was no loss. We did not jump in because the market didn't allow us anything. What it did is it hit the trigger line, actually pushed through it, but there was so much up movement the following week that it pulled the blue price percent oscillator back through the red line. That can happen, and we've talked about that before plenty of times on the program. You see it happen on any of the time periods, whether it's a weekly, 2-day, or the 4-hour, and it can be on any of the charts. And then we've seen the derivative oscillator gain energy and the price percent oscillator again. Absolutely beautiful. As we look at the 2-day chart, how strong is it? It continues, actually has popped up, swung up at an even higher angle on the price percent oscillator, derivative oscillator gaining energy, and a beautiful trend line price movement well above the weekly and the 2-day. And lastly, when we look at the 4-hour chart, what did we see? Over the course of Friday, actually over the last 2 days, Thursday and Friday, strong open box green candles that grew in size. So again, and the price percent oscillator pulling away from the red signal line after it had sort of come down close, touching on it. And in fact, the derivative oscillator rotating over, going down back in the afternoon on Thursday, but then popped right back over and price percent oscillator started going up. So again, watch things. We never know when this market, it will eventually top out and move over, my friends. It's got to. Everything that goes up comes down. We'll continue to watch and be ready for it. In the meantime, we'll be happy to take those virtual profits. Okay, from the weekly chart on the Qs to the weekly chart on bonds, TLT. Remember, TLT crossed over going down, did it not, back at the end of the prior week on Friday the 5th? And the week is a down week. It was much stronger down week, although for the last couple of days it had some up movement that really tore into the down candle and left it with a long wick. That's where price has recovered. Derivative oscillator still in the negative, price percent oscillator continuing its downward descent, pulling away from the red signal line as would be expected. For the day, TLT up 0.17%. It was the least up of all of our charts. And as we look at the 2-day chart, we can see that there is a green candle ending the week, but again, nowhere near recovering from the down candle on the prior, green candle for the end, the 2 days ending the week, but nowhere near recovering from that down candle on the 10th, representing the 9th and 10th of January. So again, that following sort of a sideways slide through our weekly vertical crossover going down. So again, a down week, derivative oscillator still in the negative, price percent oscillator still heading down, pulling away from the red signal line. Lastly, we look at the 4-hour chart. What's it doing? Not crossed over going up yet, but looks like it's trying to. It has pushed through the weekly trend line, still below the 2-day. So keep your eye on things. Let's continue to watch that. If it crosses over strong going up at the beginning of the week on Tuesday, then we need to be on alert not to lose the profit that we have had in that down move starting all the way back on Monday. Okay, back to the weekly chart and for our last chart, which is gold. Don't we love gold? Up 1.21%, blasting up. Again, 4th week of up movement. We had a weekly vertical crossover going up on gold, did we not, at the end of the prior week? And of course, it has been an up week on gold, derivative oscillator gaining upward momentum, and the price percent oscillator also moving up. As we look at the 2-day chart in gold, we see that it has spiked up also. Derivative oscillator, however, lost a little bit of energy, whereas the price percent oscillator has kicked up into higher gear. That 2-day chart ended the week with a nice strong up candle after flattening out there Tuesday and Wednesday earlier in the week for the 2-day candle ending on the 10th of January, but ended the week strong. And as we look at the 4-hour chart, what do we see? 4-hour chart continues to gain energy at the end of the week, just crossing over, going up. Again, lots of down movement at the beginning and then started sliding sideways and moving up, finishing the week strong. Again, we don't like seeing that sideways sliding movement, as we have warned. When you have an oscillator, if you don't have oscillation, that's either strong up or down movement. It starts to lose its real power and energy, and that 4-hour chart ran out of gas toward the end of the week. We will just see, though, how we move into the next week. Once this crosses over going up, of course, you can sure look to get in and have the protection typically of the 4-hour, of the weekly chart and the 2-hour chart moving in the same direction as the 4-hour chart. That, my friends, is where we are at the end of the week. Weekly vertical crossovers looking quite nice from that prior week. Those 3 that we had, both in gold, in bonds, and in the Qs, the NASDAQ 100. We love to hear from you. You have questions, problems, concerns. Let us hear from you. You can always write us cw@chartingwealth.com. Thank you so much, my friends. God bless from the whole team here at chartingwealth.com.